Hey, good evening everybody. What's up? Kamaris here, back with another video, and today I wanted to come with my mid-weekly update. Not really an update, I just want to speak about something that happened yesterday in the markets and give my opinion on it, because that's what I do. And this opinion is on how the stocks plunged as the credit downgrade rattled the Wall Street. Not the Wall Street, how it rattled the stock market, and how I was affected by it, and why this serves as a reminder that it is not easy to do this thing. All right, so without further ado, let me get started. So yeah, the downgrade happened yesterday morning, and I looked on Forex Factory the week on Monday to see what was ahead for the week, and I didn't see anything about a credit downgrade from Fitch. And I knew it wasn't going to be a what am I trying to say? Even if it was there, it wasn't going to be a downgrade. But all I'm saying is, big news like this, like a credit downgrade, is big. And when it's bad, like, people are going to get burned. And I got burned yesterday too. Now, the chart doesn't show it accurately, but yesterday when Nvidia was down like 350%, I was down around $300 because everything was down except my Netflix position. Only my Netflix position was up, and today, yeah, it's about to expire anyway. But what I'm trying to say is, okay, news like this is unpredictable. You cannot predict this on no type of news wire or nothing. All right. And so, in my position, when you're selling put spreads, when you're bullish long term, when you're bullish on the short term, events like this are going to probably get in your head a little bit. And they definitely did get in mine, because when I saw down $300 for the day on my Robinhood portfolio, I genuinely thought that, like, this was okay, this is it, I'm finished. I probably shouldn't even touch this anymore. I'm probably just gonna put my money into CDs and call it a day. But it wasn't gonna happen, because I prepared for something like this, and this is why you should always be prepared. And every Monday I tell you how the weekend before I redid my technical analysis, I redrew my zones, my lines, and this is why. All right, yesterday the S&P finally hit a demand zone that I had been wanting it to hit for so long. Every time the S&P pulls back, I'm praying that it would hit these levels, so that I could finally get in for a price that I'd want to. And it wasn't really viable for me to sell puts, because that was much more risk than I had wanted. I had only wanted a couple shares, not 100, and I didn't want to take a $500 loss to do so. So yeah, and if I had sold the 448 put, okay, it went down to 447, you would have panic sold and ran away at any point. But it hit my demand zone, and what was I able to do? I was able to buy one good share, because that's all I could really afford with all my capital tied up in collateral. I was able to buy at an average cost of 448.62, because I was ready for it to happen. Like, I knew any day now that the markets would slip and that I was going to get burned on my put credit spreads like I did on Nvidia. Like, as you can see here, this is really big, but you know what? My margin of safety is just that much bigger, because although Nvidia bottomed out to 433 all the way from a high of 480, even though it was only for like a short minute, I was still protected. Okay, I was still safe, because I knew for sure that Nvidia was not gonna reach anywhere near 425. 425. And sure enough, that created a really good demand zone on the 30-minute, and which is another reason I like the 30-minute a lot more now. It seems to have much stronger price action than the daily, but I think that's just for intraday purposes. But like, getting back to what I was saying, I knew that there would be a little bounce up from this bullish candle right here. That's why I marked this out. And when Nvidia pulled back down a little bit to this low right here, you know, I didn't have the money, so I can't say how I did it, but I did buy some more shares, about 2 or 3 shares of Nvidia at around 441. Yeah, because the price action was moving quickly, and in between like transferring the money and everything, it just had to happen. And now I'm comfy sitting at 444, and you know, tomorrow this might go down. It's definitely bearish on the 30-minute now, and it, you know, like when the market shifts on the 30-minute with my strategy, it does last for a hot minute. But it just goes to show, okay, listen, I was prepared, and even though my option position was burning, you know, I was down what, 350%. It acted as a gateway for me to actually buy shares this time. And in the end goal, that's exactly what I've been wanting to do for a long time. I've been wanting to buy shares. It's just that in June, you know, I got in at the wrong, like I entered the markets at the wrong time. Everything was way over what I had wanted. It was way over the price. So I wasn't looking to buy anything at all. And I was hoping with the, what was it? With the debt ceiling issues, everything might tank a little bit and I could get in for a really good price, but that didn't happen. So yeah, do not solely rely on technical or fundamental analysis alone. Do them both in tandem. Understand macroeconomic conditions. And I know like a lot of traders that are entering right now don't have any education in macroeconomics, so if your school does offer the class, take it because you will learn something. I know I did. And although that has to do with more like fundamental stuff, if you're a trader, right, you're looking at the technicals a lot. Do your due diligence when you do your technical analysis, okay? Be prepared for many black swan events like this, so even though you might get burned in the short term, you have a really good entry point. Because okay, you know, let's go back to my first trade. All right, this is actually a really good time for me to go back to my first burning trades. These trades that I took over here, they wouldn't have had to end in red if I had just stuck through and if I had just known what I was doing. But I knew from my first week of going all green, I didn't follow my proper set of rules. And I knew that when these went really red, I knew at one point that I had kind of went too high a little bit in what I was chasing, specifically the premium. But the thing is, I would have been okay if I had just been that much more confident in my trades, which I wasn't. But this time around, I was confident in my trade. I knew it was not going to reach the 425 no matter what happened. And I was right. And, you know, ideally, I should be making this video tomorrow. But, you know, because tomorrow by market expiration, you know, there could be another sell-off and I could get burned. But time will tell. So what I'm trying to say is, do your due diligence. Okay, and do not waver to little market movers like this, because even if you do get burned, you know, everything presents an opportunity. For every downside there's an upside, you know, equal opposites or whatever. For every positive reaction there's a negative. So to the negatives of my options being burned, there was a positive of me actually buying these stocks, which are going to do way better than my weekly option strategies. All right, so that's what I'm trying to say. And I really should have wrote a script for this video to make it much more streamlined. But, you know, if you've watched any of my other videos at all, you know, I think you'd be able to dissect what I'm trying to tell you here. So I do hope you guys learned something. And tomorrow we'll do a trading recap. And yeah.